Okay. Awesome. What's happening, folks? Good morning. Good morning. Good morning, gentlemen, ladies. Good morning. Welcome to another live session. It is the last week of the first month of the year. Hopefully, you've made the most out of it so far. Hopefully, January is off to a fantastic start. And even if it hasn't been, for whatever the reason, there's still time to make the most out of the year, and yeah, to be the best trader, the best version of yourself that you possibly can. But always remember, it takes effort, it takes consistency, and it takes action. As we come into the market today, we're going to be taking a look at gold in terms of what we can currently expect. The market this month has been very, very just very liquid. It's been moving a lot. We've hit 5,000. We've been calling for 5,000, I believe, for quite some time. For quite some time now, the last couple of weeks, the last couple of streams. And for those of you who were, paying attention in the community, where we talked a little bit about getting involved before the market gapped on Sunday, hopefully I know some of you guys reached out personally saying, you made some money, and some of you said you made a lot of it. But yeah, I'm grateful for that. So, Xavier, hey, good morning, good morning, good morning. Okay, so right now with gold, one of the main things that we know here is gold is fundamentally driven, right? So price, of course, right now it's not just about technicals, it is whatever is going on in the world. So if you are someone who trades gold, it is important to understand what is driving it. Of course, the uncertainty with the world right now, with the dollar being at the forefront, things going on just everywhere, Russia, China. It's just causing more push to the upside. I'm sure at some point in time it is going to stop. But my advice is, don't be that trader who, with little experience, tries to kind of be a reversal trader. Okay, gold's going up or this is going up too much. I'm likely going to just sell, sell, sell. You're selling in a very strong market. Let price guide you, let price tell you what to do. In the meantime, it is always in your best and highest probability um, interest to stick with whoever is in control long term. So right now, taking a look at gold, we know that higher time frame has made uh, an all-time high, which happened yesterday. So far, we haven't taken out the previous day's high or the previous day's low. So we have these two main points right there. Price right now is gravitating towards the previous day's high. So whether that's going to be taken out, nobody knows. But in the meantime, let's take a look at the 4 hour time frame. 4 hour, we had this massive bearish candle that traded all the way back to Sunday's opening, right, to fill that gap. And that's expected usually, but the last 3 to 4 weeks or so, 4 weeks now, every gap that's kind of taken place has been left untouched, right? So this was, if I'm not mistaken, here. So we have one right here, and then we have another one right here, and I think we have another one right here, right? So this is the first gap that's the market has reached for, but from Sunday open, the market still went up about 1,000 pips, give or take, right? So almost over, yeah, over 1,000 pips. So right here, what's the pattern that we currently see? Are we supposed to expect a reversal based on the current pattern that we see? And I believe that trading is all about pattern recognition, right? So while you're following the technicals, market structure, higher highs and higher lows, it's still important to kind of take a look at some of the patterns that you currently see, especially in a strong market like this. And one of those patterns being every time the market pushes up, and then creates a little bit of a bearish candle or a massive bearish candle, that candle is then engulfed by multiple bullish candles. So this is, I would say, This is either the first of its kind that is kind of clear. You also have these guys here, but I'll just say this one, and we also have this one right now. And the fact that the market has traded, all the way to the top, there is a strong chance that we can likely see price trade a bit higher. So with that in mind, we're going to be scaling down to the hourly time frame. We're paying attention here. It does look like a little bit of an accumulation range, but all we have here is we have this all-time high, and then we have price reaching for this gap right here. So there's a good possibility that we could start to see more higher prices on gold here. Taking a look here, we have this low and we have this previous low. So going over to the 15-minute time frame and see what happens. So over here on the 15-minute time frame, what we want to start to pay attention to is the sessions and what happens. So this right here would classify as our London high at 2 a.m. coming into the market. So London session made a peak, and then we started to see more sellers come into the market. And ladies and gentlemen, as I go through this technical breakdown, if you have any questions or any insights you'd like to share, feel free to do so. So right here we have the London high, boom, right? And then, okay. So London high, this is not going to classify as the London low. Let's see. So technically, London high, this would be the London low here. If we go back to the 5-minute time frame, we can start to see the market is in a bit of a range. We do have a little bit of accumulation kind of taking place as we're coming into the market right now. So it's important to be mindful of that, because if we want to be a buyer, it just means that we may have to give sellers the leeway to dominate for a bit, because based on accumulation and distribution, if this right here classifies as an accumulation zone, which in my opinion it does, if buyers are going to come in, they're going to need to come in quite aggressively. And so far we've seen strong bullish momentum here, but it doesn't mean that we can't see more sellers overall come back into the market. Taking a look on the 1-minute time frame, right? What we're seeing here is a pretty nice change in the overall structure. So I'm in favor of, buyers dominating, but I think right now, as we're coming into the market right before the 8 a.m. Candle, it's important to just kind of get a feel for what price wants to do so far. And right now, what we've seen here is we've seen from 7:30, huge push to the upside. My God, gold market is so liquid. This is probably 150 pips. Yeah, that's about right. 150 pips, right on the money. And yeah, and that happened in 10 minutes, right? So with a market like this, timing is crucial. Time of day coming into the kill zone where it's going to be liquid is super important. But at the same time, trying to be patient, trying to wait for the best possible execution is also important as well. And today, what we're going to be seeing is if we can get, we can kind of get in line with this overall higher time frame. I would love to see a little bit more of a pullback, but I don't know if we're going to be getting that. Right now, what we do have here is we have, price making an attempt to break above this high. It's been a while since we had a very fluid, easy, boom, get in, get out type of trade type of day where the market didn't take a long time to actually give a high probability setup. So with this particular trade right now, we're very close to this high. There's a good chance we could see more buyers coming in, and I think right now that's what we're seeing. This is a lot of momentum, guys, in terms of, buyers coming into the market right now. Stop loss could be placed right here. It may be worth it even right now to go in and get involved in this buy, and if the market is going to move higher. So what I'm going to do while the market is very strong, from a bullish standpoint right now, I'm just going to get my orders in place here and see if the market is willing to give a pretty substantial, pretty steady move. We got 3 shots, and the first shot is more, I would say more of I would like a one shot, one kill, right? But based on what we're seeing right now, price is pretty much close to this high right here. And we want to be a little bit patient. We want to see if the market is willing to, trade above this level here. But if sellers do end up coming in, we don't want to rush into anything right now. But basically, there's a good chance we could be seeing more buyers, come in, or maybe price grab this liquidity and then just push further down. But I do like the possibility for more buyers coming in right now. It does look good, but it's at the end of the day, it is a matter of just watching and waiting in case the market wants to grab liquidity down here. But I might go in, on this to see if the market is willing to run, if the market is willing to move. On the 5-minute time frame here, we're seeing that continuation. We're seeing, price reach for this high right here, and 15 minutes, huge, massive candle, right? So huge, massive candle right here. So yeah, there's a good chance that we could be trading out of this accumulation zone into the London high to retest it with this move, with this current momentum. And this 15-minute candle is also quite massive as well. So right here, guys, I am potentially set up here to go in on a buy. And I think I'm going to be doing that right now. So first buy trade has been executed here, and I want to see if the market is willing to continue. Stop loss is going to be placed right here. So, and this is if Tuesday, we haven't had a normal Tuesday in a long time where it's just pretty steady, pretty straightforward. So if it flows, it flows. If it doesn't and price ends up coming back down to grab this liquidity, then that is going to be the first shot of the day. But right now, the momentum is quite strong, and I want to stick to that. So right here, first shot, of the day. Let's see if the market is willing to break above this high. If it's not, then what we're going to be doing is we're going to be looking for a later entry at one of these areas, right? If sellers can come back down here, take price all the way down here, that's fine. We're going to be looking for, an entry point at this level. So right now, markets seem to fail to take out this level. So let's see what happens. But in terms of me, first execution here, we have executed that. All right. So I'm going to place my stop loss right at that low here. So hopefully today is a quick one. We can come in and get out. And then that is that. All right. So right there, we have this this trade here just on the go. I'm probably going to take something off the table if the market gives it to me, whether it's close to 40 pips, because if this is my first trade of the day, I don't mind taking something quicker, whether it's 30 pips off the table, even though, yes, that is not a one-to-one. It's just more of, it's just, I don't have to catch up to any previous losses or anything like that. So we've grabbed liquidity right now of this high. Now the question is, does the market want to continue, or does it want to come back down and grab this liquidity, give a little bit of a more solid pullback for sellers, and then pick back up again? So we're going to see what kind of move, to expect today. But right there, we have our play overall. Hey, good morning, George. Good morning, good morning, good morning. Okay. Ladies and gentlemen, let me know if you guys have any questions whatsoever. But yes, this is it. Happy Tuesday. If you're coming in on the YouTube side, hopefully you guys are having a great start to your week. And hopefully this is our first, this is a one shot, one kill. I would love, love for that to, to take place. But overall, yeah, let's see. Let's see. This is the heat of the moment. This is usually the part where, you're quite anxious. just keep it plain and simple. You feel everything. It's like, oh my God, am I going to win? Am I going to lose? What's going to happen? And all those emotions are going to come in while you're trading. And yeah, it's a part of the game, right? Your job is to learn how to regulate yourself, understand that you're not defined by your wins and your losses. You can only be defined by your execution, and that's the best thing that you can possibly do. So right now, what we're seeing here with gold is we've grabbed this high. Technically, this should be a continuation, but if the market wants to grab liquidity, it's going to come back down, take out this low, and give a pullback. So the first trade of the day uh, probably won't work. What we're going to do is we're going to wait to see if we can get a little bit more of a better entry at a lower price. And that is my thought process right now. But yeah, that's it seems the market. Yeah, there we go. So didn't play, didn't work. Came in, looked at it, was expecting a continuation, but at the end of the day, every shot you don't take, you possibly miss. So I'm going to sit on the sidelines for now, just watch, got two more shots, and see if the market is willing, to continue running. So this one was a more optimistic play, and I don't mind it. I don't mind it. I know sometimes you come into the market and it's like it's playing a lot of games. It's not giving you what you want. And then sometimes you come into the market and you take a look at it and it's just like it's just moving. So at the end of the day, that's pretty much what it is. But on the side note, posting in the community today, this right here, we'll talk a little bit about it, show it on MT4 as well. First withdrawal of the year, and pretty grateful for that. And yeah, so you can see the wins, you can see the losses, you can pretty much see all of it, right? And this is this is it. This is it. If we go over here, you can kind of get a little bit of a better look. So we'll go over here. Right, so as a trader, you're gonna win, you're gonna lose, right? And your losses are gonna always be there, right? And sometimes you might go through a period where it's just like, whoa, like you're taking losses. But at the end of the day, right, if you keep performing, you keep doing what you need to do, like you will win more than you lose. So this is pretty much the month of January, and it's been more of a treacherous one, but there's been some really great periods. There's been some really good periods, and we've tried to hold as steady as possible. So I know some of you guys can't see that, but yeah. So this is, that was placed in today, and yeah, let's see what the rest of the year brings. And the goal right now for me is, just scale. That's what I'd like to do, scale. And one of the things here is not that you don't always you're not going to take your losses, or you're not going to you're going to win every single time. You're going to take your losses, and you are going to maximize your wins. When you're winning, you're going to win. And right here, that's what this is showing. You don't have to have a 90% hit rate, and sometimes your strategy might be that, but for the most part, if you focus on your execution consistently, day in and day out, this is what it should look like, right? Where it's like your equity curve kind of goes up, goes down, goes up, and then boom, right? So pretty grateful for that. Now let's see what today, brings, and if we can finish the day with a net positive. But so far, we have started, and right now we are currently in the trenches. So let's see. But let me know, ladies and gentlemen, if you guys have any questions, and we'll get into it. In terms of some fundamentals today, let's see here. Fundamentals, we got Trump's speaking. Do we still have Trump speaking today? Okay, it's been moved to 4 p.m. Yesterday I checked, it was at 9 p.m. So, only thing we got going on today later on is consumer confidence. And consumer confidence is it's coming out at 10 a.m. So it shouldn't be that big of an impact. But what it could do is it could slow the market down until that time. When we have 10 a.m. news, oftentimes price doesn't move as freely until the news ends up, just kind of coming out. So right now, this is where we currently are, and boom, boom. Okay. Let's see. Love from Pakistan. Alrighty, let me know if you guys have any question. Mm, awesome, awesome, awesome. Okay. Yeah, so right now, while the market is still doing its thing, we are in this accumulation range. So there is some possibility that we could see, sellers come back into the market. One of the reasons why I want to be a buyer here is simply because of the market structure. In order for sellers to completely dominate, we would have to see we would have to see this low get taken out. And right now, with the strength that buyers have come in with, it's kind of matched what we've seen here. So at the end of the day, all we can do right now is wait and let the market make the first move. If today we have more of a consolidation day, it's going to suck because it's already looking a bit more choppy, but it's still pushing up, right? It still has a clean, clear direction. So now, if we can get price to trade back into this range, even slightly, all right, if we can see the market push up here, boom, right? That would be, a clean, clear break. But in the meantime, I would say that there is nothing, to do right now. It's just watch and wait. If sellers want to dominate, they're going to be taking out this low. How do you mark your entries, or what gives you your edge? It's very simple, but great question. In terms of entry points, you need an execution strategy. Execution strategy could be based on market structure, could be based on market structure. It could be based on the strategy that you have tested over and over and over again. And we have, I have a few strategies under my belt, but two main strategies that I execute: accumulation and distribution, and then market structure breaks, right? So if higher time frame is bullish, right, that's where I want to try to stick to. So a lot of emphasis isn't exactly placed on the execution strategy itself. The emphasis is placed on the higher time frame itself, because the best way to break it down is, if you've ever seen The Godfather, right? I got a sick painting coming up, and I'm going to be posting. Just behind me, it's my tattoo artist, and my lady got it done recently, and it's cool. I think it's the three figures. You guys will see it when I get it done. It's hard to explain now, but yeah. So in the mob, you have the Godfather, right? The mob boss. You have the generals, the lieutenants, and then you have the foot soldiers, right? The guys who are coming in, and the order comes from the mob boss, the Godfather, right? And then you have your foot soldiers who are going to execute. You have your lieutenant, who are like, okay, your 4-hour time frame, your 1-hour time frame, right? Slightly higher time frame, and then your execution time frame is the foot soldier who's going to execute the bids. And a lot of people put a lot of emphasis on strategy, strategy, strategy. Your strategy is your foot soldier, right? So if you always maintain this perspective, you will always, even if you do end up being wrong, like sometimes, like because that's trading, you are still going to be right over a long period of time because you are following the orders that are coming from the Godfather, which is the higher time frame, right? And in today's case, higher time frame right now is bullish, right? So the execution time frame, that's where I'm going to be putting my strategy and I'm going to be executing my trades. It's not a big, it's not the most important thing because anybody can execute, right? But not everybody can kind of create a situation where you can stick to the higher time frame. So your execution strategy is important, but understand that in terms of the hierarchy where it falls, your execution, your strategy in particular is not as important as the higher time frame bias. The higher time frame bias is more important because that's what is going to allow you to take price, to identify where the market is going, and your execution is what allows you to get involved. So you can use market structure break, you can use a strategy that is pattern based, clean, clear, patterns, right? Accumulation and distribution is a very clean and clear pattern. So right now, what we're seeing here is if we are able to see price actually close above this range, then that would give us a clean market structure break for us to execute a trade based on that. But first, we would need to see, a nice clean close above this range. And while the market is getting ready to do that, and if it does do that, we can execute a trade because higher time frame is bullish and we want to stick with the higher time frame, which is the Godfather. So hopefully that makes sense. But yeah, let's take a look right there. Let's see. So get some orders in. And right now, sometimes it's important to wait. A lot of the time, not sometimes, it's important to wait for a clean close, right? Wait for a clean close. Because with this market right now, there's a lot of volatility, and one candle could, do a lot of a lot of work. So there's that excitement to get involved, but there's also that fear of like, oh my God, what if it just wicks like this, right? So right now, my thought process with gold is very simple. Strong bullish market structure, prices making higher highs and higher lows. We've seen a grab of liquidity right here. If you want to be aggressive, you can get involved right there before price takes out this high. But for me, I'll probably prefer to be more on the conservative side right now and see if I am able to at least, get involved as price gets slightly closer to this high, where I know that if the market is willing to take out this high, there's a good chance that, it actually wants to trade above. So, okay. That's crazy, guys. I'm gonna, come on. I might just miss this one, eh? That would suck. Ain't that something? All right, should I get involved? I'm gonna get involved. Let's see, I just wanna see if we can get a little bit of a wick. All right. So, got involved right there. Now, it all depends on what the market wants to do here, right? So, we're in on the buy trade here. The market could certainly pull back significantly, but you can, yeah, this one is a little bit tricky. We've seen that grab liquidity here. I would love to see a continuation and see if the market is willing to run. Today could be a day where price is just grabbing the highs and grabbing the lows, but right now, in my opinion, if the market is grabbing the high, then there's a good chance that it wants to push higher. If it doesn't, it doesn't. I'm gonna give price a little bit of room to breathe and just fucking place it. My stop loss just slightly right at the bottom of this candle here, because if the market comes back down here, then unfortunately, then it's likely just going to engulf and sellers are going to dominate. But right now we're following the rules. You know, we're following our execution rules. Wait for price, break above the high, give a clean market structure break. Another approach you can wait for is to wait for what do you call it? Um, Buyers candle to actually close right above this level. But price right here has grabbed liquidity, right? Came back down, and we've seen a strong push to the upside. So for me, if this doesn't play out, then you know I'm just gonna sit on the sidelines for a bit and say, hey, you know what? Maybe today is not my day. I got my withdrawal, and the market is not looking to give me anything else for the remainder of the day. But right here, what we've seen so far is you know, huge push. Price grabbed the lows right here. Grab the lows right here, and then we saw buyers come back in and take out the high. So ideally, in a normal market, we should see a continuation to the upside. But when the market is choppy, when the market is in a consolidation state, it is not as fluid as you would want it to be. But so far, this trade was executed in good faith, with at least a good base. Now it's just a matter of whether the market genuinely wants to run or not. If it doesn't, then you know we take our losses and we walk away for the day. All right. Yeah, some days you come in and it is okay. Yeah. Seems that today is the market is here to fight. There we go. Not happening. Okay. So right there, boom. You know, couldn't get it. I think right now, while we're in this consolidation range, the market is just not going to respect a lot of these market structure break, which is something that we also know as well. But unfortunately, when you're getting, you know, a good huge push to the upside, clean, clear, you know, confirmation, and then you're executing with bullish candlestick, with bullish momentum, and the market is still not playing that ball. You know, I'm gonna be just, you know, frustrated, but you can't get frustrated. All right, you gotta keep calm, stay collected. Yeah, that's it. Got one more shot in the chamber. I'm not gonna be pushing it. I'm gonna let it be, you know, for me personally, and just kind of watch a little bit. It's Tuesday, the week has just started, and yeah, this is it. So it's a little too. I don't like it when it goes up, because with trading gold, momentum is big, right? You never want to go against momentum with gold because it's quite punishing. And right now, if you see right here, boom, huge push to the upside. Boom, that momentum doesn't continue. We grab liquidity. So pretty much the same thing that we did here. Huge push up, huge push down, came back down, took out this low, came down, grabbed liquidity, huge push up, grabbed this high, and the market seems to just want to just play that game of back and forth, back and forth, back and forth. So in my opinion now, if you are going to take a trade, if you are going to get in this market, I would say wait for price to just completely, you know, break out of the zone entirely, right? It might consolidate a bit more. It might grab this low right here. Yeah, if you want to be aggressive, you know, you can get involved while price is still here. And it's probably not bad, because when the market grabs the high, it tends to pull back. But for me, you know, one of the main things right now is I want to watch, because right now the market is just moving sideways, right? So it's going to move sideways like it did here and probably give a nice push up. But when that's going to happen, right, it's a little bit hard to tell. But this is it. Yeah, so some days you come in and then you get you get smacked around a little bit, and some days you come in and it's more of a survival game. But overall, I'm pretty happy to close the month. We did our 37 K withdrawal, 35, sorry, 35K withdrawal, and could have done a little bit more from the positions that we took just from buying gold in the last couple of weeks here. Held that position for quite a long time, longer than I actually felt comfortable holding, but I was pretty confident in it. So yeah, so yes, timing might be off, most certainly today, most certainly. But Tuesday is a high probability day. Tuesday is a high probability day. So when you come into the market on Tuesday, there is sometimes, normally, it's fluid. It just, you get a market structure break and price continues. And sometimes, right, based on this market that we've seen in January, January has been good in terms of just moving with the higher time frame, but in terms of the choppiness in the New York session, that's been high, right? That's been high, but there's still some opportunities if you are trading later on in the session, right? So right now, what we're seeing here is we are seeing sellers come in to the market. I wouldn't, in my opinion, I don't know if I would trust this sell, because right now we have taken out the market is currently in the habit of taking out the high and taking out the low. So I wouldn't be surprised if we see a huge push back up right now. And in this market condition, it's not about timing. It's more about just like you have to be extra patient because your standard execution principles will not work, right? Because the market is not respecting the market structure, right? So right now, based on this market structure, sellers should continue moving lower. And by all means, they absolutely should. But I wouldn't, like I said, it wouldn't be surprising if buyers come in just as aggressively as sellers have came in. And yeah, so this is it. So it'd be probably smarter to just wait a bit more because prices, it's in seek and destroy mode, right? It's grabbing highs, grabbing lows, right? That's what it's doing. So look at that, right? You see that? That's the type of this is the least enjoyable market to be in, and your best course of action is to just wait for it to see a surge of liquidity in one particular direction rather than anticipating where price is going to go. When we come into the market, before the market starts doing this, before the range starts expanding, because this is an expanding range, right? This is now, that high is right there and then right there. So it's not a friendly market because the range is expanding right in front of you, right? So you can sell, you can buy, but neither of them are going to be right, right? So it's important to just it's just important to just watch a little bit, So it is a very erratic market right now. So yeah, I would say just kind of keep your hands on the trigger, right? But just be mindful. You can't trust the buys, you can't trust the sells unless the market actually move. You can't, you can't predict anything when the market is moving like this. And I don't like to use the word predict because I don't think as a trader you should ever come into the market and try to predict, but you should be able to anticipate. And the anticipation is if the market does this, then based on standard procedures, it's going to do this. But in the market condition like this, yeah, you're not doing it. If you do it, hey man, I salute to you. But it's just better. It's better in hindsight market conditions are better in hindsight. But if you are patient and you can wait and sit on the sidelines, boom, then that's fine, right? So for me, it might take the first trade to kind of figure it out, right? And because I don't put a lot of pressure on myself to get it, I want a one shot, one kill trade. Absolutely, but I don't put a lot of pressure in myself for that, to always be the case, because then pulling the trigger becomes a lot more difficult. So if I come in and I think, okay, price is actually going to be running, beautiful, then that's what I'm going to be doing. So right now, what we're seeing here is we are seeing the market just, pushing up, and there's a good chance that it can run nicely. But like I said, in this market, price has a tendency of pushing in one direction and pulling back. I don't think that we're going to be seeing a complete 360 again. I don't think we're going to be seeing sellers come back in. I mean, if they do, that is going to be crazy. But I do believe that because of this, it is important to wait for structure, for sellers to actually pull back, or for buyers to run out of this range a little bit and then wait for sellers to pull back, because the market is 100% going to pull back, because that's it pushes down, it pushes up, it pushes down, it pushes up. So even if buyers may dominate and take price all the way up, it is important to let buyers dominate and then wait for that pullback before you get involved. And that pullback could even be as low as all the way down here before we get a turnaround. So I don't think, we're ready. It's one of those days. It's one of those days, guys. So don't beat yourself up too much. And these are times where it's like, if you are losing or you lost the trade, you're going to lose for three reasons, right? Poor execution, strong psychological pressure, right? Strong emotions, and terrible market conditions. But you have to know what you're doing in order to say it's the third, right? If you're coming into the market, you don't have a clean execution style, you're not waiting for price to actually do A so you can do B, then you can't blame it on the market, right? Because if we say price moves, makes high highs and high lows, high highs and high lows. Look at this. Look at this. Somebody look at this. So if the market does that, right, it's like it's in a bullish trend, right? If it's pulling back, there's a good chance that we're likely going to see a continuation to the upside. And then when it breaks structure, there's a good chance that we could see price continue moving lower. These are the standard principles that govern market structure. When these standard principles are failing and you are executing based on them, and it's not exactly your fault at that point in time, right? It's more so, you got to think outside the box to avoid it. You have to anticipate that, okay, this is the type of market condition that we're in. So you're going to sit out, you're going to wait and let the market do its thing, right? So right here, same thing, right? So this is what we're looking at. This is what we're seeing. Classic seek and destroy. There is no point right now in being in the market, right? There's no point in being in the market. You have to sit on the sidelines. You have to sit on. Don't force it, because you can lose your entire account from a market condition like this, right? All right. So right now, what we've seen, as expected, right, price is pulling back. Now, if we start to see the market actually take off and push into this range, sure, then we can consider going in on something, going in on it. But is this an ideal type of market to trade right now? No, not particularly. Taking a look in the 5-minute time frame, you can kind of see it's quite a bit of a interesting candle here, right? And we can still see sellers come in, right? We can still 100% see sellers come in, because on the 5-minute, this is the market structure that we do have. All right, so we have this low, we have a lower high, lower low, and right now we are currently in this range where there still is that possibility of sellers coming back in and following that structure. But so anything can happen. Anything can happen. But in the meantime, we're just going to watch, give it a few more minutes, and see what happens. Do you trade any other time frames? Yes, I do. I'll look on the 5-minute time frames. But most of my executions usually on the are on the 1 minute, because gold is too liquid, in my opinion, to trade any higher time frame, because I don't. It would cost too much, because if one candlestick right here, my stop loss is usually 40 something pips right now in this market. It went from 30 pips to 40 something pips, right? So right now you can't, if one candle can be, Jesus, 70 pips, 72 pips. What am I doing trading a higher time frame? Because I'm not going to be able to place my stop. My stop loss is going to be too large, right? It's just not going to work. So, you know, the myth, there is the lower time frame, 1 minute, 5 minute can be noise, depending on the market or instrument that you're trading. But with gold, it is a myth. It is not noise. It is not, if you're trading a pair like Euro USD, where the hourly time frame doesn't move, might move, I don't know, 40 pips in 2 hours, then yeah, you have no business being on the 1 minute time frame, right? Because it would be too slow, it would be too choppy. But with gold, each candle is clear. This move right here is probably 100 pips move, 130 pip, right? So this is a lot of movement, right? A lot of movement. So if you are going to have a stop loss that is not 60, 70 pips, then in my opinion, this is trading a lower time frame, 5 minute, 1 minute would be it. Would be good. But whatever works for you at the end of the day, that's truly what matters. But today we are catching smoke. That is it. We are, but the market right now needs to start to pick a direction and needs to move. In the meantime, we see if the market is going to run. If it's not going to run, boom. Let's see. So right now the market has pulled back, and we've seen a break out of this range technically with this move right here. I think what we want to see now is if the market is actually truly willing to run. Another thing to factor as well is this is the London high, and price usually has a hard time breaking out of the London high. But yeah, it's a little bit of a tricky one, It's a little bit of a tricky one. So based on accumulation and distribution, right, this would be an accumulation zone. The market failed to break out of this to continue a move to the downside, and then we saw buyers come back and take out this high. But I genuinely believe that we're going to see a bit more of a pullback, at least maybe down to equilibrium, which would be this point right here. If price doesn't actually fail to take out this low. But I think that the market is going to attempt. So I would be a bit more on the patient side and wait to see if sellers can come back in again. Otherwise, we risk getting involved while the market is doing the exact same thing. But Tuesday so far, the market condition hasn't been as it's not moving yet, right? It's not moving yet. It's a little bit more on the choppy side, which is expected. The market on Sunday ran like it stole some money, and it's just been pushing up. And I think yesterday we've been seeing a little bit of that correction taking place and price kind of coming back down overall. So right here, this is what we want to do. We want to wait and see if the market is going to keep taking out the highs and taking out the lows. And this is the current pattern that the market is currently in right now, and it's not fun when it's like that. It's not fun when it's like that, but you still got to make the most out of it, make the best out of it. When I was starting off as a trader, these market conditions would literally just frustrate the hell out of me. It's like I had nobody told me, okay, when you're coming into the market, pick a side and stick to it as best as you can, right? Don't be so fluid, because a lot of the time we come into the market higher time frame bullish, and then we come back to the lower time frame and we're so easily swayed, and then we start selling, right? Or we kind of go with the highest bidder, right? If sells are available, we take it. If buys are available, we take it. And we kind of lose high probability grounds that way. So for me, I would come into this market just looking for any possible opportunity, buy, sell, and if buyers did that, your sellers did this, I would go in. If buyers did this, I would go in, and it's just like, and then you get frustrated and you keep pushing it, keep forcing it, keep forcing it, keep forcing it, and then you get hijacked psychologically. Right, your amygdala gets into that fight or flight mode. But sometimes when you realize, okay, what's going on, then you just sit on the sidelines. And that comes with a level of experience, with a level of maturity, and a level of humility as well. Because losing well requires humility, right? It requires a bit of no ego, right? It's like it's a deep understanding of, like, it's part of the game, right? And you have to be the best loser, not for me, not for anybody else, but for yourself, right? And making sure that you don't internalize it, because it's like, this is the game. Some days you're gonna come in and you're gonna be Warren Buffett, and some days you're gonna come in and you're not gonna be able to figure it out. But then there's some days where you're gonna come in and the market is playing games. And I never really understood that, because there was so much that I didn't know and so much knowledge that I lacked at that time. So I could never blame the market for doing something or for being in a choppy state. Even if the market was in a consolidation and I lost, I would still be like, I'm stupid, or like I did something wrong. But sometimes you come into the market and you realize, okay, you're trying to take price to point A, and it's just staying standard, right? Whereas now, when you have the right knowledge, you can start to anticipate, because you've seen the same things over and over again. So everything so far that price has done, we have called, right? It's been in the consolidation range. It broke out this high. Don't buy. Wait, for price to actually give that pullback. But it comes with lessons. You have to make mistakes in order for you to learn this way, right? So But once you learn, once you realize, have the patience enough to just observe and just wait. So right now, ladies and gentlemen, gold prices aren't exactly doing anything. It's grabbing the highs. We can put this here as well. Boom, right? This high right there. We have this low right here. If sellers want to target this low, then we also can expand this range as well. And it's going to suck, but yeah, this is the type of time price is on today, and you can't force it. But if the market starts to push back up because it wants to respect the structure, then we know that it's about time that we start to look for a possible buy. But in my opinion, right now, I'm not as once I see, okay, this is what the market is doing. It's not as, yeah, look at that. It's not as it doesn't even, I'm not going to even go in on the sell here because, yeah, maybe sellers can absolutely dominate, but I've seen this 4 times today already. I've seen it 4 times. So right now, you turn your focus over to this high, right? And that's it. This is, you turn your focus over to this high because this is what the market, is doing. It's grabbing the highs, it's grabbing the lows, it's grabbing the high. And the reason why I know this so well is because days like this are the only days where I actually lose, in the market. Because it's like, yeah, days like this are the days where it's like I've taken enough L's in a market condition like this that, like, hey, I know it well, and it's like, and the thing is, you're still going to lose in days like this at first because the market doesn't start out like this. It's different when you come into the market and prices in the consolidation range. Clear, you can kind of see it, you just wait. But when the market starts out trending high highs and high lows and starts to do that expanding range right in front of you, it could take a little bit of time to kind of figure it out. And that's fine. It's like playing with a new opponent and you're trying to figure out, okay, like, what's your strength? What's your weaknesses? And and you might be losing first. That's like the hero's journey, every superhero movie, right? You go through your losses, you go through your L's, and then you figure it out. This is okay. Now you get it, and then that's when you can either plan, how can I dominate? How can I come back in? How can I win? But you're not going to do that if you are down and you're beating yourself and it's just like, okay, you don't know what you don't know. There's always going to be that, right? There's always going to be that. So right now, this is not a seller's market. This is not a buyer's market. This is a sit the fuck market and just, do absolutely nothing. Excuse the language. But yes, this is sit on your hands. Sit on your hands if you want to keep your account. But eventually, the market is going to push up, right? It's just in a market. So now, how do you trade this, and how should we approach this market, right? The question is if we're going to be here long enough. I might not be here long enough to see the market break out if it keeps staying in this state. We do have 10 a.m. news, so generally when we have 10 a.m. news coming out, things like this happen. We get later distribution closer to 9 a.m., closer to 9:30. Now, if we are going to trade this market, what you want to see is no longer one candlestick break. You want to see the market actually create a strong push to the upside, an undeniable push that tells you, okay, this is not going to be that back and forth anymore. It's done, right? And that's likely what we're going to see eventually. And then you can wait for that pullback and then look to scale, or maybe it happens to the downside and you do the exact same thing, or we start to see, market structure, right? Market structure being respected, and boom, right? You start to see price do something like that. So, this right here, what we're seeing now is we are seeing a bit of that market structure take place where sellers have now taken out this low, pull back. So this right here is a good sign for sellers to come back in and dominate, because they have that opportunity and they have that play. So right here, it's looking like sellers can have the upper hand, and we can start to see that push to the downside here. So yeah. So sells short term, right? But these are some areas of liquidity that we can possibly target. So right here. So for me, I'm going to sit on the sidelines for now. Let sellers do your thing. Let sellers dominate. And yeah, I'm not going to look to sell today. If sellers do end up dominating, fantastic, but I'm just going to sit on the sidelines in case buyers do come in. But right now, what we do have is that, it looks more like sellers are now going to come in. All right, it looks more like sellers are going to come in and grab some liquidity. But we're going to watch and we're going to wait. I would rather stick to the higher time frame than than play the seller game. So this is just me personally, but if you are comfortable with taking sells, you guys go for it. Just keep your risk nice and as tight as possible. As tight as possible. Nice and good. Ladies and gentlemen, let me know if you guys have any questions. Boom, look at that. So even the 5-minute time frame here, same thing. We have a break, a high. We've seen a break of structure here as well. All right, so right now the market is very much in that seek and destroy, and maybe it's going to start running lower, but it's tough. George, I'll tell you, if you are not functioning at a high level, you wouldn't be as successful as you would like. That was a great observation that you just described, and it was because you have seen it before. You always have to remember what you have seen before. It has to be engraved into your memory so you know how to make mental and execution adjustment as needed. If you forget, it will be a painful reminder. Well said, George. That is fantastic. Absolutely. And that's why it's important to learn from your wins and from your losses, right? Because these are all things that is going to guide you. And that's the same for life, right? If you, find yourself in the same cycle over and over and over again, and you keep repeating the same mistake over and over again, it's because you haven't learned from it, right? And sometimes you might kind of walk into a room where it's like it's the same mistake's about to happen. It's just you can walk out, because it's like, okay, I've been down this path. I'm not going down. I know what the consequences are. But I tell you guys, I have lost. I remember I was working security, and this was like one of my last real security gigs. I went from working at it was Saks Fifth Avenue. I was loss prevention guy, so I was doing that. My suit, whatever, watching high clientele come in and just seeing if people are going to steal stuff. And then we lost the contract because the company started hiring immigrants. And there's nothing wrong with immigrants, but Saks Fifth Avenue. You have the highest level of clientele coming in. You have handbags that are worth more than the average person makes an entire year. Jewelries that cost, more than a house, right? So it's like you want people who can actually communicate, who can carry themselves extremely well. So because they couldn't fill that gap, we lost the contract. They moved me over to a grocery store where I was pretty much doing the exact same thing, but it's half the size and it's like a pretty much like a convenience store. And they wouldn't let you wear a security uniform. They wanted you to wear plain clothes. So I'll go into this grocery store in a nice, very nice neighborhood, and try to catch people stealing expensive cheese. The jobs that we've all done. And try to catch people because that was one of the main things that they had a problem with. And eventually, people would come back to the store multiple times a day and they'll be like, who's this fucking black guy? I saw him over here. So sometimes people would report me and be like, I think there's a guy who looks suspicious, because he's just watching. So it was probably I've done factory jobs, a lot of things under the sun, but that job I hated the most because it was just uncomfortable. There wasn't enough space for what they wanted to do. They were better off just having a security guard, at the front where everybody knew, right? But anyways, goes to say, my game plan was I am going to be a successful trader. I'm going to make as much money as possible with trading so I don't have to go. So I put $500 in, had a little bit of savings into the market. I'm already trading for, at least, a year or two, give or take at this point. And I'm like, trading this market in particular, I remember I put $500 in. I'm like, I'm going to make some money. And the market just kept going back and forth, back and forth, back and forth, back and forth. And then I would put my $500 in, I would over leverage, lose, and then I would put my $500 in, over leverage, and then lose. And I remember eventually, while the market is doing this, I couldn't win, and I went to work that day, and I was so sad. I was so sad that the walk to work was just frustrating. And there's nothing wrong if you love your job, guys. If you love what you do for a living, there's nothing wrong. But, the large majority of people don't. And I was part of that majority of people who didn't. And I still decided that after that week or so, I just stopped showing up. I'm pretty good, with working for other people. I just don't enjoy it. But that was a job where I stopped. The only job where they don't even know what happened to me. I just stopped responding. I just stopped showing up. I didn't care about the paycheck that they were gonna pay me or whatever. I just didn't want anything to do with them. And then I just switched, over to personal training, to control my time so I could trade. But a market condition like this, I remember that day because it was such a pivotal point in my turning point for me. It was like, this is it, this is it. But yeah, you're gonna have days like this. So fantastic, George, insight. You need to remember them, and there needs to be a level of humility where, yeah, there needs to be a level of humility where you don't beat yourself up because it's like confidence in this game is really hard to maintain. It's harder to get. So if you have it, don't lose it, and understand that you're gonna win and you're gonna lose, but you have to judge yourself based on your execution. And when you have those days where it's like you lose a funded account, you lose, maybe a small live account, or you have a losing day, feel that emotion. Don't come into tomorrow with that baggage of trying to over, try to make up for what happened yesterday without actually going over it. Right. So yeah, that's the biggest learning point. But anyways, guys, right now what we're seeing here, sellers are now respecting the zone. We are clearly in sellers territory, and yeah, by all means, they can likely dominate. But I think for me right now, it is in my best interest to stick with the higher time frame and let sellers do their thing if they are going to dominate and push forth. Um, yeah, so we could see price, push a little bit over. We have this low right here that price is reaching for, and this low that the market is reaching for, and we can see price start to, play within this range. So for me right now, there is no more incentive to be a buyer. So I'm gonna let the sellers play their game, dominate. I'm gonna see. I'll give it a few more minutes, right? Maybe like 15 more minutes, give or take, just in case. Sellers are like psych. They start to fade and they can't take out this low, because if they can't take out this low, then we're gonna see more buyers come in. But so far, what we have seen so far is prices respected this accumulation zone by pushing lower. So it's a patient one. But as you go into a new month, right, go into a new month, analyze this, your first month of the year, January. What are some of the things that you can improve on in your trading, right? Is it the psychological aspects, right? Is it the technical aspect, right? It could just be your technicals are good. It's just more of making sure that when you show up to your trading, you're focused, you're relaxed. So there, I usually say a good morning routine can go a long way. Meditation, reading before your session just to relax and calm your mind. Yeah, so come up with a game plan every month. It is important to just reflect, reflect on the data. This month for me was good. We did a withdrawal today, which I just shared in the community, 35K, but it could still be, it wasn't, it wasn't an easy month. It wasn't an, it's still, for me speaking, it wasn't an easy month. Day trading gold this month wasn't as easy. Like it was, there were lots of lots of lots of difficulties in that. But in terms of buying and holding, it was simple, and that generated a pretty substantial amount. But overall, we still made enough day trading that we would still be up. But in terms of the actual, like New York session, I didn't find the New York session as pleasant this month. So February, anticipating a little bit of a better period, better month in terms of just having the New York session just be fluid. But maybe that's just me. Maybe that's just my observation. But there was a lot of choppiness that happened. Uh, it's not about I seem to know what the market is going to do next. I don't, right? And nobody does. You can anticipate, right? And I think in terms of what we've talked about earlier, we did call a lot of the movement, but that's the reason why you trade the same market over and over again. If you don't know that market is at the back of your hand, or at least try to understand it, it's not going to be you're not gonna be good, But the reason why they say pick one market or two market and focus on it is so you can build and develop mastery, right? Mastery can be developed if your focus is all over the place, right? Because when you start to trade the same market, it's like marrying a woman, marrying a man, and their all their habits, everything, right? Like it's all the things to avoid and whatnot, and still sometimes there's still things that you're gonna miss here and there because you never truly know, but at least you have a better understanding of their tendencies than someone from the outside looking in, and that's exactly what this is, but every single month liquidity distribution changes, right? So if Asian session is trending this month and it's very easy market structure, high highs, beautiful. Next month it could be the London or the New York session that moves like that, and Asia be a bit more on the choppy side. If you don't believe me, don't take my word for it. Go over to your market and test it, right? You're going to see that the sessions, there are months where it's like it's more choppy, later distribution, right? And then there are months where it's like Tuesdays I come in, usually Tuesdays, you come in, boom, right? It just starts moving. It's fluid. Summer months are they're good. They're usually it's sometimes could be more choppier than the winter months, but yeah, you learn different things by giving the market consistency. Consistency breeds consistency. You give price consistency, it'll give you consistency in return. I also trade only gold. Been hard month. Took only 5 trade, 1 loss. That's beautiful. All right, that's beautiful. Um, yeah, that's beautiful. All right. So right now it is. I think the main question now is, does the market want to continue moving lower, or if we're going to start to see that push back up? So where we are right now, we're in a position where the market has turned around previously before right here, and satisfied. Okay. So yeah, so the question now is whether the price wants to move back up, and there's some room. There's some room for buyers to come in, but sellers right now do have their play. If we start to see a little bit of that change in structure, I might take a little bit of a buy and see if that's going to have an effect. If that's going to have an effect, but I want to see a little bit of a change in structure before doing so. Otherwise, it would be a gamble. So right now we're seeing the market reject from this point. I think we could see price start to actually push up here. Let's see here. So right there, this would be that point. And I think seeing if the market is going to push up, and we could see that, right? But it's important to wait a little bit, just so we're not overly aggressive and the market moves lower. But I got one more shot that I want to execute here, and I think this is going to be it for me. I'm gonna go in on the buy, guys, and if price goes up, great. If it doesn't, let's see if we can get a little bit of a pullback here. Let's see if we can get a little bit of a pullback. So right there, so if we go back here, looking to see if the market is going to pull back up here. Technically, that's kind of what I'm expecting here, to see that turnaround. But you want to be a little bit on the cautious side just because you don't know. And yeah, you don't want to get in too quickly, because right now sellers are still dominant. All right. Okay. So I'm in on a buy. And right now, whatever the market decides to do, great. If price continues to go up, cool. Um, if it doesn't, then it doesn't, right? So right now we are in on a buy trade, and stop loss is going to be placed. Stop loss is going to be placed for me personally. Yeah, right at this low here. So Jesus Christ. So right now, so I'm going to move, because if the market doesn't run, then the market doesn't run. But right here, what we've done here is we've shot for premium price, which is oftentimes not what I like to do. But when you catch certain things happening in real time, you want to take advantage of it. So if the market does end up coming back down, then we end up losing the play. We end up losing the trade. Um, Let me see, just so I would say right here probably makes a good enough stop. I would say right there. So now, in my opinion, where is the market going to reach for? There's this high for price to reach for, right? If the market doesn't want to run, guys, it is going to come back down and we're going to get taken out. But I do believe that sellers have had their fair share to dominate today, and they haven't taken advantage of that. And yeah, they haven't taken complete advantage of it. So if now they still want to dominate, fantastic, then this won't work out, right? But right now, what we do see here is the market making higher highs and higher lows, right? And on top of that, this is an area of interest, which I like to call equilibrium, where the market traded into, and then boom, right? We can start to see price move away from that zone, especially with buyers being in control of the market. So in my opinion now, where's the market reaching for? We have this area of liquidity, which is about 90 pips from here. I don't think that I'm going to be waiting for price to reach this level in order to take something off the table. If buyers do end up dominating completely, they need to come in very aggressively, because this is an accumulation zone. So let's go over to the 5-minute time frame just to see a little bit more what we're missing. Okay, so we could see the market potentially trading to this range. It's very close to this point here, or it can just continue to make a fall. But I do see on the 5-minute time frame, this is a clean wick, right? So this can see the market push up cleanly all the way to this point with very little hiccup. But at the end of the day, nothing is guaranteed when you execute your trades. It's important to take your trade based off of good reasons, good executions, and just see what the market is willing to do. So for me right now, that is the most important thing. Seeing if the market is willing to run, or if if today buyers have no interest in actually dominating, right? This is going to be the biggest separating factor today. But right now we are in this trade, up slightly, you know, uh, 2K here. If the market does continue to go, fantastic. But with this accumulation zone, buyers, if they are going to dominate, would need to come in very aggressively. Otherwise, it's just not going to hold. This is a massive candle, right? So it's going to be very difficult if price doesn't do that. So Eventually, for me, I'm going to look to take something off the table, probably if we can get a break above this high and just slightly trade above it. Look to take something, move my stop loss to break even, and see if the market is willing to run. Um, yeah, so this is my game plan. Hopefully, this makes sense, but hey, let me know. Um, it's not about the amount, right? It's not about the amount of it's 8K. Yeah, 8K is 8K, but it's not about the PNL. Sorry, the overall profit. It's about your execution. And right now, in terms of what we've seen the market do, right? So right now, yeah, I could take 30 pep off the table, cool, right? But we've seen the market give about 40, 50 pips. But if you're executing where like, it's not like I believe that the market is going to magically just go all the way up, but I'm executing at a level where price could possibly turn around. If it does turn around, I want to put myself in a position where I can at least ride the trend. If this was my first execution for today, I absolutely would have taken something right there, but this is not it, right? So for me, it's more of an aggressive approach, and that's something that I'm comfortable with. If the market doesn't go, it doesn't run, and then it comes down and stops me out, then that's it. But this trade is taken in anticipation of buyers actually coming in for the day. And if they don't, then by the looks of it, it looks like, they may not be coming in, right? And then that's it. We walk away, and today's not our day. We just let it go. So right now it looks like sellers are coming in, and prices, yes, the market is looking to do a number. Yep, that's it. That's it. Down. So there you go. That's it. So right now the trade executed right there. See if the market is going to run. See if the market is going to continue pushing up. And what we've seen so far is not the case. We got a little bit of profit there, but in terms of what we could have seen if the market actually moved a bit more, it would have been more. Take something off the table. I believe that absolutely. But I think my game plan was to see if the market would continue a little bit while giving price a little bit of room to breathe. So, if you took something off the table, kudos to you. But to me, I was just like, I was content. I was content with it to see if the market is going to actually run, and it did it. Now price is still kind of playing that game of back and forth, back and forth. But if buyers do end up coming into the market again, we're going to see that. But to me, I'm not going to push it with this market. It gave us, a nice one. But I wanted, you could say it's you could say, yeah, you could have taken something off the table. But if it's my first execution of the day, my rule is I'll take something off the table, even at 30 pep, right? But if it's not my second execution, I like to give the market a bit more of like, let's see if I'm right in the direction, and then trail it that way. Because in this market condition, the market, if it runs, guys, it runs, and it can run like 200, 300 peps, give or take, and you don't want to take yourself out of the game a little too quickly, because you can, with a small position, you can get a lot more. So yeah, so this is probably it for me, guys. This is it. Today came into the market, not my day, and we anticipated most of this movement and saw how the market was moving. This trade, could have been something we took off the table, if that was our first trade. But for me, I think right now I'm just, I'm pretty much tapped out. So I'm gonna let it be. Tomorrow is another day. Come back in, see if how that is, And if buyers, I wouldn't be surprised if buyers still end up coming in closer to 9 o'clock. Well, it's 9 o'clock right now, closer to 9:30 or whatever the case might be. But right now, the market is not picking a direction. It's kind of moving, up. It's moving a little bit down. And based on what we're seeing now, there's a strong likelihood that sellers could dominate, but I wouldn't trust it. I wouldn't trust it. I would still, if you are short, at least just be mindful because the market could be, just taking out the highs and taking out the lows continuously until like 9:30 when it's actually ready to move as we get closer to the news. So this is it for me. This is it for me. Um, you know, this is it for me today. I am tapped out. And yeah, we'll learn. We'll be back here again tomorrow and see what the market has in store for us. Ladies and gentlemen, thank you guys for watching. If you have any questions, feel free to reach out. And till next time, I hope you guys are out there living free. God bless.